Step inside the Global Weather Center, secure the blast shutters on the observation deck, and completely recalibrate your Doppler radar systems immediately, because we are currently tracking the formation of a Category 5 macroeconomic supercell that is about to permanently rewrite the financial topography of the entire planet. Welcome to the Extreme Storm Tracking Desk forecasters. The severe weather alert violently flashing across our primary meteorological monitors is designated Mega Pump Ahead. Economic shift could trigger XRP reversal, and if you are currently standing outside without any shelter, staring at the stagnant barometric pressure of the $1.40 spot price, you are fundamentally failing to understand the devastating atmospheric dynamics currently building right above your head. The civilian population is entirely focused on the temporary drought. They look at the dry, cracked earth of the retail cryptocurrency markets, feel the agonizing lack of immediate volatility, and incorrectly conclude that the rainy season will absolutely never return. They are packing up their digital belongings and abandoning the fertile valleys out of sheer psychological exhaustion. But down here in the deep-range forecasting bunker, our atmospheric sensors are picking up a completely different, terrifying reality. We are not looking at a permanent drought. We are observing the terrifying, invisible accumulation of moisture and kinetic energy that precedes the most violent financial hurricane in modern recorded history. The legacy central banks have deliberately manipulated the global interest rate climate, creating an artificial high-pressure system designed exclusively to exhaust the retail sector. They want the over-leveraged day traders to succumb to the heat wave, break their psychological tethers, and surrender their digital assets for absolute pennies before the floodwaters arrive. The moment a terrified civilian abandons their position out of sheer atmospheric boredom, a highly advanced sovereign entity, operating entirely within the shadows of the financial storm clouds, instantly absorbs that discarded liquidity to feed the impending cyclone. You have survived the most brutal regulatory winters and the most devastating cryptographic droughts imaginable. Do not let the manufactured stillness of the air convince you to step outside the storm shelter right before the fundamental laws of financial gravity are permanently rewritten. The economic shift is flawlessly unfolding right in front of our lenses, and the artificial high-pressure field is about to violently shatter as the true mass of institutional adoption collapses inward. The sheer density of capital flowing into this specific coordinate of the financial hemisphere is completely unprecedented in modern meteorological history. The legacy algorithms designed to suppress this celestial event are failing. Let us redirect our orbital weather satellites away from the dazzling, deceptive sunshine of the public trading exchanges and forensically analyze the invisible, high-density, low-pressure systems that are currently warping the very fabric of our global financial climate. If you want to survive the greatest transfer of wealth in the modern era and successfully navigate this unprecedented intersection of macroeconomic weather and cryptographic technology, you must completely reject the superficial, noisy forecasts broadcasted by the mainstream financial media. The legacy banking cartels are absolutely desperate to maintain their monopoly on global capital precipitation, and they are executing a highly classified resource extraction operation right under your nose, perfectly shielded from the naked eye by dense regulatory fog. The corporate financial networks are aggressively pushing a completely recycled narrative, falsely claiming that institutional capital has entirely evacuated the digital asset sector due to rising geopolitical temperatures and localized political gridlock. But let me tell you a fundamental, undeniable scientific truth about surviving in this ruthless digital climate. If you rely on reused, copy and pasted forecasts fed to you by the very entities actively trying to harvest your energy, the algorithmic systems governing this environment will ruthlessly wipe out your portfolio and permanently wash away your future. You must forge a completely original conviction based on hard, undeniable, on-chain atmospheric telemetry. If we bypass the public monitors and audit the highly encrypted data streams emanating from the United States spot exchange traded funds, a glaring, multi-billion-dollar structural anomaly immediately illuminates the Doppler radar. The monolithic financial titans commanding these heavily fortified investment vehicles, sovereign entities like Bitwise, Canary, and Franklin Templeton, have quietly accumulated an absolutely staggering stockpile of over $1.3 billion in physical cryptographic assets. How does a storm system of that magnitude move over $1 billion of pure, concentrated fiat moisture into the digital ecosystem without violently triggering the public exchange alarms and launching the spot price into an uncontrollable upward trajectory? The answer lies in the highly secretive, completely unregulated subterranean reservoirs known as over-the-counter dark pools. These massive sovereign asset managers are not walking into the brightly lit public markets to execute their multi-billion-dollar acquisition orders, because doing so would instantly detonate a massive price explosion and permanently destroy their carefully calculated covert accumulation margins. They are silently hoarding the physical float inside these dark pool aquifers, mathematically locking away the circulating supply before the massive macroeconomic tidal wave officially makes landfall and shatters the public exchanges forever. The unseen moisture is actively bending the atmospheric pressure, push the thermodynamic telemetry scanners to their absolute maximum capacity, and focus directly on the core cryptographic jet stream powering this entire decentralized weather system, because the engineering genius of this enterprise engine is exactly what the legacy institutions are actively weaponizing to secure their future existence against the incoming hurricane. The civilian traders completely misunderstand the fundamental particle physics of this ecosystem. They mistakenly believe that the financial valuation of this network is solely dependent on amateur day traders buying and selling physical tokens based on erratic emotional sentiment and fleeting social media breezes. They have completely failed to anticipate the explosive, parabolic scaling of Ripple's enterprise stablecoin infrastructure, which is currently acting as a massive, unstoppable kinetic burn mechanism deeply embedded within the network's atmospheric architecture. In the span of just a few short months, the RLUSD network capitalization has violently expanded past the $1.5 billion threshold. We are no longer tracking the erratic, unpredictable behavior of retail speculators. We are tracking Fortune 500 corporate treasuries and massive legacy banking syndicates aggressively hardwiring their cross-border liquidity operations directly into the Ripple framework to escape the archaic, expensive, and devastatingly slow friction of the dying global banking system. But here is the ultimate tactical secret that the institutions are desperately trying to conceal from the public eye. The XRP ledger functions as a frictionless, high-velocity digital trade wind, and RLUSD is merely the heavily armored commercial moisture packet traveling directly through its core. In order to successfully authenticate, validate, and execute these massive corporate stablecoin transfers across international banking corridors, the base protocol irrevocably mandates the permanent combustion of XRP as cryptographic fuel. The stablecoin does not replace, usurp, or compete with the native asset. It acts as a massive industrial-grade accelerant for its underlying mathematically programmed evaporation rate. Every single time a multinational corporation executes a multi-million-dollar cross-border settlement utilizing RLUSD, a fractional percentage of the native token is automatically incinerated by the network code, permanently erasing it from the historical circulating supply. This is equivalent to a supercell storm mechanically consuming its own mass to generate infinite kinetic energy. My predictive models are closely tracking this mechanical demand vector, and it is operating with flawless, algorithmic precision, entirely independent of human emotion, political gridlock, or temporary geopolitical fear. The network is systematically evaporating the native supply, while Wall Street desperately attempts to hoard the remaining physical float inside their encrypted dark matter vaults. This is the exact cryptographic formula for an unprecedented, violent supply drought that perfectly aligns with the master meteorological blueprint. Expand the intercontinental reconnaissance grid to encompass the entire global macroeconomic theater, because the momentum triggering this massive infrastructural climate shift originates on a highly synchronized, international scale that completely dwarfs the localized weather patterns happening within the domestic borders of the United States. A master meteorologist understands that the total domination of a new financial infrastructure requires the complete systemic alignment of the old world sovereign pressure systems, and the phenomenon actively unfolding right now accounts for this exact universal convergence to maintain absolute global atmospheric stability. While the domestic civilian sector is completely mesmerized by the minor political drizzles in Washington, D.C. and the temporary agonizing price suppression on their mobile trading applications, our international observatories have intercepted critical, paradigm-shifting frequencies from the highest echelons of European and Asian financial syndicates. Weeks ago, we empirically confirmed the highly classified infiltration of Ripple Prime into the National Securities Clearing Corporation directory under the undisputed center of gravity of Wall Street, the Depository Trust and Clearing Corporation. That precise atmospheric maneuver effectively hardwired the decentralized ledger directly into the absolute beating heart of the American traditional equity settlement citadel, ensuring that the legacy fiat system is fundamentally tethered to the XRP ecosystem. But the new, incredibly urgent intelligence that confirms the massive, impending supercell collision is an unprecedented European and Asian convergence, designed to integrate directly with this new digital standard. We have verified that Société Générale, the titanic French financial institution commanding nearly $2 trillion in global assets, has officially activated its MiCA-compliant euro stablecoin directly on the Ripple infrastructure. Concurrently, the Japanese banking leviathan SBI Holdings has successfully deployed a massive blockchain-based corporate bond specifically designed to reward traditional retail investors with physical XRP. When trillion-dollar sovereign banking entities voluntarily integrate a decentralized cryptographic ledger into their core operational machinery to settle corporate bonds and stablecoin transfers, it mathematically guarantees a tidal wave of future utility volume that will absolutely overwhelm the current algorithmic suppression. The sudden, violent jumps in trading activity you see are the market algorithms desperately attempting to price in this massive international precipitation before the retail sector realizes the global perimeter has already been fully breached. The legacy fiat architecture is actively crumbling under its own inflationary debt spirals. The central banks are injecting massive waves of fresh liquidity, and the digital replacement is fully operational. The global storm front is completely locked into place. Download the final storm evacuation trajectory parameters directly into your personal navigation matrix immediately, because identifying the sovereign manipulation and deeply analyzing the massive structural reality revealed by this meteorological anomaly is absolutely entirely useless if you are permanently trapped within the flood zone when the extreme volatility finally strikes. We have empirically proven the covert dark pool accumulation by the billion-dollar exchange-traded funds, the exponential utility growth of the RLUSD kinetic engine, the massive DTCC systemic integration, and the colossal international banking deployment successfully executed out of Europe and Japan. So, what is the ultimate mathematical destination of this digital asset when the global liquidity cycle officially peaks? The universal storm alignment is finalized, and the algorithmic containment field is permanently shattered. Highly classified macroeconomic risk assessments, continuously refined by elite quantitative meteorologists at Tier 1 institutions like Standard Chartered Bank, have established a mathematically grounded baseline target of $8 per token for the conclusion of this specific atmospheric cycle. To the uninitiated civilian observer, currently psychologically traumatized by months of agonizing artificial suppression, an $8 projection sounds like impossible, utopian science fiction designed merely to generate false hope and trap retail liquidity in the eye of the hurricane. But to the elite forecaster who understands the absolute mathematical certainty of a violently constricting physical supply curve colliding head-on with exponential institutional utility bandwidth, an $8 valuation is merely a highly conservative orbital waypoint on the journey to total structural dominance. However, you cannot successfully navigate this high-stakes digital wealth transition without a ruthlessly disciplined, completely emotionless framework. Human greed, impatience, and panic are the ultimate fatal vulnerabilities when attempting to achieve escape velocity from a dying financial climate. I strictly mandate the immediate implementation of an automated execution strategy known as the Thirds Protocol. When the network price violently shatters the historical all-time high resistance parameter of $3.84, you must automatically execute a tactical payload release and sell exactly 33% of your holdings. This unemotional maneuver secures a complete, absolute recovery of your initial fiat capital deployment, instantly transforming the remainder of your digital portfolio into pure, stress-free profit. The secondary operational tranche is programmed to ride the algorithmic liquidity wave toward the $8 institutional target zone, serving as your ultimate liberation vehicle. The final tertiary portion must be securely encrypted and locked in your deepest cold storage vault. Secure your keys, trust the mathematical trajectory over the television pundits, and execute your survival strategy flawlessly. The countdown is complete. The storm breaks now.